Welcome back. Still watching Business Morning on Sunrise Daily, and yes, we are discussing recapitalization, which is an ongoing one in the financial sector, especially the deposit banks in the country. Let's find out the perspective of investment bankers, see what they're expecting from this and how they're preparing for this. We have the Managing Director, United Capital Investment Banking, Dr. Gbadebo Adenrele. He joins us right here in the studio. Dr. Adenrele, thank you for your time. Good morning.
Good morning, Nini. Thank you. Thank you for having me here.
Good to have you. So, banks have submitted, or they're supposed, I haven't seen this, I'll just say, they're supposed to have submitted their plans for the recapitalization. They still have almost 2 years, beg your pardon, left. I don't know if perhaps you have seen it. You guys are very active in the financial sector, and your thoughts about their plans. We know obviously the capital market is going to be very busy, but perhaps you can help us to expose some of those opportunities that will be available to investors for this recapitalization.
Okay, thank you very much, Jenny. I think the CBN came out with the recapitalization guidelines, and banks are expected to raise their capital buffers. So a number of banks from regional banks will now need about 50 billion naira. National banks, down banks with national licenses, 100 billion, 200 billion. And then banks with international licenses will need 500 billion. If you look at all the banks, what was required to come in would be about 4 trillion naira across the banks, the ones I've mentioned, as well as merchant banks and non-interest banks as well. That 4 trillion naira is going to come over a 2-year period, and it's about 22 months left now. And we think that that bodes well for investors across the buy side, as we say it. You get a sense to say that this is similar to what happened in 2004-2005 recapitalization period, where we had 89 banks, and those reduced to 25. They raised capital, they merged, and the capital requirement was raised from 2 billion to 25 billion then. Slightly different now because we have different tiers and different options are available for the banks. But essentially, these banks will be coming to the market to raise capital, both domestically and internationally, and there lies the opportunities for investors to increase their stakes in these banks and for new investors to come into the different banks as they come out to the market.
So there's also been conversation about how many banks will survive. Some have said about 11. So, of course, potential investors have to be careful of where they go into or which path they look into. What would you say would be the ingredients to look out for as an investor looking to, participate in this recapitalization?
So I think for the banks, there are about 7 banks with international licenses, another 21 or thereabouts with national licenses and regional licenses. What is key is that what's the value proposition of each of these banks, right? And what's the outlook for these banks? There's a view around what their historical performances have been. There's a lot of access to that. A lot of these banks are listed and their information is public. But there's also the view around the future of the market. Again, with 4 trillion expected to come in or they're about to come in the financial services space, the space is going to get stronger. So you have more stability in the financial services space. This is going to trickle into a stronger economy, and banks will generally do well as they raise capital, they're able to intermediate more in the economy. So by and large, you find out that a lot of these banks will do well. Now, for investors, identifying which ones, now you generally say the bigger banks clearly stand a better chance in terms of scaling the requirements. But what you also see is that because there's a slight difference in what we have now, because you have tiers, you have options for the banks. Some of these banks can scale down their licenses from international to domestic, and from domestic to regional, where they're not able to meet those recapitalization requirements. On the other side, you have mergers and acquisitions. You have opportunities for banks of similar size to come together, to form larger banks that can compete more favorably, both on domestic and international level. We see a situation where you have almost all the banks scaling through, so there shouldn't be any worries for investors in terms of are there going to be banks that will fail and all of that. I think the confidence is there. There should be that confidence that a lot of these banks will make it. Either they raise capital, and where they can't meet that, they would combine, or sometimes they get investors both from new investors or acquirers, both from international and even domestic markets.
Yeah, because even in the case of mergers, I mean, investors are still safe.
Yes, in case of merger, so your investment in the bank still remains because you're still a shareholder in the combined entity at the end of the day. And just to give a sense around even this whole recapitalization exercise, the confidence level should be, there's no reason for investors to be worried. And I give you some example. I'll give you some metrics. Look at the credit to GDP ratio of Nigeria, right? It's about 14-15% right now. You compare that to the sub-Saharan African region, it's average of about 47%. Right? And you compare that to more developed markets like the UK and thereabout, where it's over 100%, you see that we still have a long way to go, and increasing the size and the strength of the financial services sector would only bode well for the economy. Also look at total assets, for example. Total asset to GDP ratio from a country perspective, total banking assets to GDP ratio is about 15-16% or thereabouts. And you compare that to other economies in Africa, Kenya is about 47%. Kenya itself is also recapitalizing. The Central Bank of Kenya just came out with new guidelines for the banks in Kenya. They're also doing something similar, and they are 47% already. South Africa, which is also a strong economy in the African region, is about 74%. Right? Remember, Nigeria is about 16. You look at Egypt. Egypt's total asset to banking is about 100%. So there is still a very long runway. The opportunities are there for the Nigerian financial services, and this recapitalization drive is only positive. Can only be positive, yes.
Yeah, and I'm sure as an investment banker, you are excited. A lot of windows are opening up for business.
Yes, indeed. Yes, indeed. I'll say that from the market perspective. So I'm actually the vice president of Association of Issuing Houses, and that's the umbrella body of the investment banks with issuing house license in Nigeria. And we are all, happy about this directive around bank recapitalization. A lot of work to be done, but you also see that even from the regulatory perspective, there's been a change at the leadership of the Securities and Exchange Commission, and that has already hit the ground running and with a lot of positives. But I also tell you that also from our end. From my end at United Capital, we are well positioned. We have firm and team experience in raising capital for companies across financial services, energy, consumer goods. More recently, if you recall, earlier in the year, we listed Transcorp Power at 1.8 trillion naira on the Nigerian exchange. That's about 2.8 trillion. But we have experience working with a lot of financial services companies in raising capital to support their growth aspirations. The same will play out for the banking recapitalization space. For the market in general, both the buy side and the sell side. Buy side being fund managers, stockbrokers, and those with funds who benefit from this. Like I said earlier, investors will be able to invest in the shares of these companies. And on the sell side, which is where the investment bankers come, we'll be able to work with the companies, with the banks, essentially, in selling their stories, selling their equities, selling these opportunities to investors in Nigeria and abroad, actually.
And we do hope the capital market is ready for the action that's about to hit it.
Yeah, indeed. The capital market is actually ready, and like I mentioned, both the buy side and sell side are fully ready. I give you an example of my firm. United Capital PLC has a balance sheet size of circa 1 trillion naira. We have a suite of services, the investment banking business, which I look after, but we have an asset management business, for example, which is the second largest in the country, and we also have a wealth management business. We have a stockbroking business, which is number one in terms of trading volume. We also have a foremost trustee business. We have a consumer finance business and a microfinance business licensed by the CBN. So for this group, for example, we're well positioned to be able to support banks in their recapitalization drive, and a number of other capital market operators are in a similar position where they are prepared and well positioned to be able to support markets, support the banking industry. More importantly, I think this recapitalization drive, it will catalyze the Nigerian financial services industry and the Nigerian economy at large.
All right, Dr. Gbadebo Adinrile, the Managing Director, United Capital Investment Banking. Thank you so much for your time.
Thank you very much.
All right. All right, just before we head back to the Sunrise Daily Studio, let's look at the numbers, close of trade yesterday.